What's going on, traders? I have a very exciting video to bring you guys today. Today's topic is going to be on market alignment, okay? Lining up your trade with the breadth of the market. So this is something that almost all traders talk about, but very rarely do they actually explain their process. So we're going to go ahead and dive into my process for lining up a trade with the overall market, and where I kind of get my conviction or my, I would say, decision support, right? So, say I'm looking at a situation, I see the triangle, I'm really interested in taking it, right? But you hear people say, don't trade in a bubble. This is what they're talking about, right? But like I said, no one really explains this stuff. So let's dive on in and I'm going to get to it. Right? We've got 4 breadth indicators that I use every day for every trade. They're going to be the add, which is the add decline line. Right? We've got the Uvxy, which is the short-term VIX futures, the tick chart, and the SPY or NASDAQ, depending if it's a tech stock like, say, Tesla. Right? All right, so first let's get on into the add, which is the add decline line. Now, this is, let me explain what this is before we jump down, because I don't want you guys to be staring at the chart and not listening. So the advanced decline line is a breadth indicator based on net advances. So this is the number of advancing stocks, so the number of stocks that are green today, minus the number of declining stocks, right? So a net advances, or the add, the number it's displaying is going to be positive when advances exceed declines and negative when declines exceed advances. Okay, so this means the number of stocks that are green on the day minus the number of stocks that are red on the day will give you a value. Okay, and this value is taken in real time. So as things are moving and playing out, right, the breadth of the market, right, this number will change. It'll adjust. And as this number is changing, you're getting patterns and movement on the chart, just like you would on any stock chart, any price chart. It's really interesting to see because, I'm going to get into this in a lot of videos coming up, but stocks tend to move together. Right? Like stocks don't really just do their own thing. They're kind of linked to the overall market, which is why one of my breadth indicators is going to be the SPY or the NASDAQ, which is the QQQ. Right? So anyways, let's get down to it. So this here is going to be a chart of the add. Right? This is the add decline line. This is what this chart looks like. Right, this yellow line here, this is going to be our 0 line. So this is when it's flat. When there's just as many up stocks as there is down stocks, we're going to hit this yellow line, right? And these are kind of like my, what would you call them? When we're up near this red line, we are very, very bullish, right? A lot of stocks are green versus red, right? So as you see this day here, this is the day we're going to talk about. This is the 18th. So this is July 18th. And we opened up, boom, right? Very strong up here in the 18 to 2000s range. So if you were thinking, like I was, that the market may be going down, this might be a gap to fade. We might want to fade this gap, right? Well, we're not going to do it, as we're seeing candles like this one here with like this nice pin bar here, boom, and it pushes. We're not going to short into that, right? We're going to wait for a pattern. Me personally, I'm all about the triangles, right? I will explain this in future videos. You'll see in coming up slides here in a minute that triangles, they're my bread and butter. They're my entry signals, and it works on all charts, anything that has to do with price. Okay, which is why they're so phenomenal. Like they're great tools. So here we go. Right? We got our initial low, right? Our second low, which we had a nice strong reaction. We connected them out and sent the line out, right? So now we have an ascending support line, right? We have a descending resistance line, which is going to make us a triangle, right? And as we start coming out of this, right, we start fading down. We go below the low of day. Now, what is this saying? This is saying that the overall market, right, this is NYSE, all of NYSE, the New York Stock Exchange, NYSE, the number of stocks that were green, because we were near the 2,000 line, right, is declining. So these stocks are now turning red on the day. They're turning red on the day, right? And we start to fade down with this chart. Okay, so this here is going to give you a green light for a short. Okay, so if you're seeing this happen on the advanced decline line and you're seeing more and more tickers are going red, you're not going to go long into that, right? It seems like, common sense a little bit. You're not going to long into extreme weakness, right? So that's our first breath indicator, right? And in an effort to keep this video less than like 30 minutes, let's go ahead and move on to the next. Okay. Now the next one is going to be the Uvxy, which is the short-term futures. I hope that's what comes up next here. Yep, Uvxy, short-term futures. So what does this one mean? This one here is, let me get you the definition. Short-term VIX futures ETF, which tracks the ETN of the VIX, right? The VIX is an ETN, and the Uvxy is an ETF. So this is the volatility index. It signals the level of fear or stress in the stock market, using the S&P 500 index as a proxy for the broad market, and hence is widely known as the fear index. Okay, the higher the VIX, the greater the level of fear and uncertainty in the market. So when fear goes up, right, when the chart goes up, when the price goes up, okay, the fear and uncertainty and people worrying is increasing. Okay, so I like to envision this as like a 401k owner, right? Somebody that kind of owns their 401k. They see, their account, they're down. Like right now, we're down about 25% on the year, and their fear and uncertainty is very high, right? They're very scared. It's very painful to lose that amount of money, especially in a long-term account like that, because it's not just a little bit. They're usually fully exposed to the market, and that hurts. Okay. But when fear goes up, what do people tend to do, right? People tend to sell out of positions. And what does selling cause, right? Selling causes prices to drop. So, in short here, when the Uvxy or the VIX goes up, okay, the overall market, the S&P 500, goes down, right? So generally, like on this day here, when the VIX was going down, we can look at the chart and I'm sure that the market itself was going up, right? So now with the fear rising here, right, taking off, fear is ripping, and uncertainty, right? People want out. They don't want to stick around and hope what's going to happen to their money, right? Let's just hang on and see what happens tomorrow. No. They get out, right? People that hold and hope like that, they don't have any money in the market anymore. They usually walk away from it. They talk negative about it. They tell stories about how people lost all their money and they'll never participate again. But they just didn't have a good strategy. They didn't have a well-rounded understanding of what the market's all about, right? So once again, this is the Uvxy, right? This is an ETF, so you don't need any special subscription to track it like you would with the VIX because it's an ETN. And what you need to take from this is when the VIX goes up, okay, when the price goes up, the overall market goes down, okay? So now next, this one here it's one of my favorites, but it's different because it doesn't exactly track price, and it's more of like a rubber band type, like boom, boom. You'll see right now. Okay. So this here is going to be the tick chart, right? This is the NYSE cumulative tick chart. Again, the New York Stock Exchange cumulative ticks. This is a 1 minute bar chart. And let me explain what this is. So the tick chart compares the number of stocks that are rising to the number of stocks that are falling on the New York Stock Exchange. This index measures stocks making an uptick and subtracts stocks making a downtick. So we were talking a minute ago about the advanced decline line, and that is going off of the green or red for the day, right? The advancing or the red on the day, versus yesterday's close. Now, the tick chart is measuring the current upticks versus the current downticks of all the stocks right now, right? This is not comparing to yesterday. This is comparing to right this second, okay? How many stocks are pushing and how many are declining, okay? And we're going to subtract that and we get a number, right? So for example, there's roughly 2,800 stocks listed on Uvxy. If 800 stocks have made an uptick and 1,000 stocks have made a downtick, the tick chart will equal plus 800, all right? So as you see here, plus 800 is pretty extreme. This is where I have my extreme bar, this purple line. I put this there. And this other purple line here, I put this here. These are set at about 700. And, it's pretty reliable, like as you see here, right? The best way to think of the tick chart is sort of like an RSI or like an oversold indicator. What I'm trying to highlight here, and I'll come back to this, this isn't the only time I'm showing you. What I'm trying to highlight here is every time we got a negative tick of about 400 or 350, we rebounded, right? So we went down, we rebounded. We went down, we rebounded. So as we come down here and we're not going any further, it might be a good time, right? If you're looking at your chart or your setup, right? Because you're not going to trade this. You have a stock that you chose in the morning with a process. And maybe let's say it's coming down into its support level, right? And then on the tick chart, you're going to see this hammer candle show up, boom, right where it's been bouncing this whole time. And you might take a long there, right? Long, boom, boom, boom. And then you're going to get out of that long when we see extreme weakness, like we do right here, this little gap level to cross through the zero line, right, which is the flat level, as it comes down. And this time, it didn't get caught. See, we had an attempt on this candle here, and then we had consolidation, and then we just fell. We fell all the way to an extreme low, right? So all of a sudden, the Uvxy stocks, they were coming down. Let's say near like a fucking moving average, right? And they're coming down and they're bouncing off, right? They're coming down, they're bouncing off. And this time it went through it, right? And we see that right here. Boom. It went through it. And it wasn't just one stock. It's 900 more than are going up, right? So now the tables are starting to skew, right? And as it said, there's 2,800 stocks listed on the Uvxy. If 800 made an uptick and 1,000 make a downtick, the tick index would equal plus 800. Right here, we're doing it reverse, right? So 1,800 stocks are making a downtick and 1,000 stocks are making an uptick. This is indicative of the overall fear, the overall movement of the market is leaning down now, right? We were kind of flat and consolidating here, and then we broke through that, right? We're going to get a bounce, obviously, here. So in more detail later, right, you would want to find an entry after this break. We were going to rubber band up, and it's going to stop. It's going to fail, right? And this is where you would want to take your entry, right? This would be a short entry. We'll get into this later. Sorry. Different video. So anyways, what I'm trying to say is that the tick index is a popular indicator used by day traders to view the overall market sentiment at a given point in time. Seeing the ratio of up stocks to down stocks allows traders to make quick trading decisions that are dependent upon market movement. Typically, readings of 1,000 plus or minus are considered extremes. Traders should be mindful of overbought and oversold conditions at these levels, meaning as we come down here and the whole market's like just dropping, and you see the tick chart start hitting this purple line that I drew myself, I need to expect a pullback, right? Or a relief rally, right? We're falling, falling, falling. It's not just going to crash through. Price doesn't just crash through. There's always the retest. There's always the relief rally. There's always the consolidation. Always, always, always. Okay. Maybe like 1% of the time, things just crash straight down, but that's like extremely rare. There's a very clear catalyst for that. That is not a typical way that a stock would move. Okay. So this is the tick chart. This is the third market breadth indicator that I would use. Okay. And these are all used together. And I'll show you in a second what it looks like when a signal is given to get in. Okay. All right. Now, this is our last one here. All right, so this here is going to be the SPY. This is all on the same day, by the way. All these charts that you're seeing. When you just saw that tick chart a minute ago break through and go lower than before, this is where we were when that happened, right? That first breakthrough. So we fell out of the triangle, right? And then the chart we just looked at showed that we lost our support, right? At the same time as leaving our triangle. Right, that all of these things come together. You'll see in a minute. So let me get down on the S&P 500 here. All right. So the S&P 500, or simply the Standard & Poor's 500, is a stock market index tracking the stock performance of 500 large companies listed on exchanges in the United States. It is one of the most commonly followed equity indices, and because of its diversity, it is regarded as the benchmark of the overall market. So the S&P 500 has a ETF, right, which is a 1/10 ETF. So the price is going to be 1/10, right? You add a 0 for what the actual SPX is at. And that ticker is going to be called the SPY, SPY. Now, one second. If, say you're looking at a chart, right? You're looking at a setup. You're looking at something, say you're looking at another triangle, but that's going to be on an actual company's independent stock, right? And you're like, oh man, we're going to the moon. I think we're going up. I think I should buy this long right now, right? We're gapped up, right? Just like the market, we're gapped up. We're going to rip, right? We're pushing up into a resistance level. I think it's going to pop, right? Because at one point, this candle here was a solid green candle, right? So was this one. It looked like solid green, like it might go. But it didn't, right? We then consolidated. And your signal was never to go long, right? Because you want to align your trade with the overall market. So if you see this happen, where your consolidation breaks to the downside, you want to have your eyes on a short, right? You want to trade with the market. You want the advanced decline line. You want the short-term VIX futures, the Uvxy. You want the tick chart. All these things, you want them all going the same way. And that's the direction that you want to trade, right? Now, as all those things are happening, imagine the confidence you would have in your trade, right? Imagine like seeing this happen. You go to your chart and you're like, you know what? I think this is a short. We just broke below support. We're retesting. I'm taking an entry. The chances of that reversing and stopping you out and making you scared, like, oh no, maybe the market's going to rip higher. Like no, it's not. Stick to your guns, man. Trust your gauges, right? I don't know if there's any pilots out there, right? But trust your gauges. You don't just second guess them. You don't say, oh, this altitude, I think this is off a little bit. Let's try to go under 0. No, you trust your damn gauges, right? And for a day trader, these are your gauges. All right, now let me show you something. This was a pretty nice trade day for us. This was a home run for me. Definitely a home run trade. After we got this break here, not once did any of these little swing highs actually break. So like as we came down, right, you would want to put a stop outside here, drops down again, another lower high, stop above that, drops down again, lower high, stop above that, drops down again, lower high, stop above that, stop above that, stop above that. Right, we've retested double here because we're breaking through the 20-day, right, which is totally expected. Boom, we drop down, and then here we get the bullish engulfing on massive ending volume. Bam, you cover your short, right? Huge move. This was a 6-to-1 move. 6-to-1, right? So your initial risk is to above this this high here. And I know you wouldn't be trading on here, but this is your chart will look similar. I'll show you here in a second. But anyways, okay, let's get past this again in an effort to make this video not 30 minutes. We're at 20 minutes right now. So, okay, so let me show you what this looks like all together. All right, so this day I was sitting here. I was waiting for my short. This is my left monitor, right? I have 5 monitors, and this is this one right here. And I knew not to take a long because we were pushing into this down. This is the SPY. Okay, so right here, this is our advanced decline line that we just went over, right? This is the Uvxy. This is the short-term VIX futures here that we also just went over. This is the tick chart. So this is what it looks like when all of a sudden we have a new unexpected change, right? Boom. Holy crap. We went lower than we've gone, and we're holding lower than before, and we're hitting our extreme levels. Okay. As this is happening, all of this is happening at the exact same time, right? Look at this. We're breaking through the 200, the 5-minute 200 moving average, which is something I really kind of subscribe to. And boom, we're breaking through it. Not only are we breaking through it, we're breaking through it on volume, which if you know my trading style, that's huge, right? I require volume to make a decision, and this is volume to make the decision, right? Boom, the fear and uncertainty has now increased beyond the resistance level that it should have turned around at if we were going to continue higher. Okay. Now the advanced decline line is starting to go through the low of day, just like a regular stock chart, right? You breaking through lows, you got to go, right? Get out of your longs. That's not a good place to be. And then this one here, right? We're breaking below our 500 or 450, which is about where we were the whole rest of the day. Kept bouncing off that, right? Bouncing off that, break, right? Break. So fear and uncertainty up, right? Advanced decline down, because as this goes up, the market goes down, right? It's literally inverse nearly always. And then the tick chart, so the number of stocks that are down ticking right now is increasing. So all of these are indicating the exact same thing, right? The advanced decline down, weakness, right? Uvxy up, weakness, fear, weakness, right? Tick chart down, weakness. The S&P 500 down, out of consolidation even, weakness. See this volume ramping here? More and more sellers are coming in as the price gets lower and lower. Weakness. Okay? Now, I want to show you a couple, like, what it would have looked like in an actual trade when all of this was coming together, okay? So, let's just remember, I don't have my actual chart here, but I want to say this was about, I don't know, 1215, 1220, right? So let's look at the first possible trade here, and this is going to be on Apple. Okay, so say we're watching Apple, right? We were gapped up with the market, right? We were coming back and we were testing. Remember the market, the overall market has a trend line up here and it can't get through it, right? We did a lower high and then a higher low, right? So higher low, lower high, higher low, same high, right? So a double top, and then we start breaking. We break through VWAP, which is this dotted white line. And as this area is coming through, right, when this is happening, that is when we're seeing all of these signals are happening, right at the exact same time as this. We're coming out, right? This is your entry, guys. Right? This is where you go short. You get in here. Your stop goes above this double top, right? And you let it roll. Okay? As you saw in the other charts, right? This continued like freaking far. Okay? And the trade I actually took, okay, because I didn't catch this. I was watching the S&P 500 and I was like, dude, this is like lined up perfect, right? This is what that entry looked like right here. Okay? as this is popping up, this is what we're seeing. The exact same time, right? So we're seeing all of these things here. These are all like, see, we broke here, boom. It broke here, boom. Broke here, boom, boom, boom. Right? This was the entry. Okay. Stop goes under here. I mean, we'll talk about all that later. Not a big deal. I'm trying to explain market breadth and how to, look at your gauges, trust your gauges, trade with your gauges. Okay. Now, what do you think happened to this trade, right? This particular ticker here, this is the SPXS. This moves inverse to the market. So I felt like I had a really good read on the S&P 500. I thought for sure, it's dropping. Okay. I know not for sure 100%, but enough to make a educated guess and a trade on it. Okay. So let's see what happened. Okay. I got in here, and you know how I move my stops with the market structure. So every time we get a swing low, I put my stop underneath that new swing low, and check it out. Boom. Right? This was our entry. Bam. Up, 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 up. Bam. Done. Hit the 20, cash out. Right? And this was all done with the conviction given to me by this. Right? These inside indicators. Now, that's it. I had one more thing I might want to show you, but I feel like it might get confusing, so I'm going to leave it at that. If you guys have any questions, if you have any comments, if you think I did a good job, if you think I should get a little bit more in depth on something, if you want to contact me for more information, feel free. Please hit that thumbs up. This is a new venture for me, trying to explain my day trading world to you guys. And I would really appreciate the thumbs up, the subscribe. Think about it, please. Takes only 1 second to do. It really helps. I hope you guys have a great rest of the day. If you have a suggestion on what I should do next, feel free to post it in the comments, and I will see you guys next time. Thanks for watching.